Hi everybody and welcome back to the channel. So in this video, I'll just be going over my 2023 stock picks that I did earlier in the year and just see how they performed, just because, a lot of creators give a lot of stock picks, but then they never follow up and actually analyze if they made good picks or not. I think because a lot of people are more serious about just getting people to listen to their stock picks. Again, I just did it mainly for fun. So in the 2023 stock picks video I did, and you can watch it in the description below. I'll leave a link at the top of the video. You can watch that. I gave myself a few parameters. So we had $10,000 to invest, and I had to pick 5 American stocks and 5 Canadian stocks. And essentially, I had to pick stocks that were in different sectors because I wanted to be diversified. But I also wanted stocks trading at good valuations to cheap valuations, just so we can have a good expected return for the year of 2023. So let's just look into what we picked here. So for the U.S., my first pick was Amazon, and we bought it at an average of 97. Amazon was trading at a very, very low price at the time. Tech was really low at the beginning of 2023, and I just thought Amazon was just a fantastic business. It turned out to be a very good pick because the current price is now 153, so that was a really good call, about a 57% rate of return. So not going to go too far into why I selected the companies. I'll just touch on it slightly. The second pick was Berkshire Hathaway. So the average cost is $310. Current price is $356. So up 14.8%. While that may look good, we didn't lose money on that particular purchase. If we had made it, if I sold off my whole portfolio, started again, the S&P 500 did about 23%. So that is actually a bad investment, and really demonstrates why it's difficult to beat the market. So that wasn't the best choice. Moving on, Tesla, that was a fantastic call. So it was at 133. So I made my video on January 22nd, and all the prices that I have for the 2023 stock picks were the closing price as of January 23rd. Just to make it fair, just so I couldn't cherry pick like the best time earlier in the month. I feel like it's only fair that the video assumes that I would have purchased the portfolio on the next day. So that's how I did it. So equally weighted, $10,000 across 10 different stocks. So Tesla did very well, up 89%. I just thought, mathematically, it was the first time in a long time that Tesla was trading at a very fair to low valuation, considering all their growth potential, and definitely not only self-driving, but in the robotics space with the Tesla bot. So Tesla proved to be a very, very good pick, so massively outperforming the index. And the next pick was a Microsoft. So this is another good call. It was 242 and currently trading at 374. So that's about a 54% rate of return. So another fantastic pick. Pretty self-explanatory. I mean, Microsoft is one of the best companies in the world. I hold it in my own personal portfolio. So far from these picks that I made for 2023, Microsoft and Tesla seemed to have been just incredible calls. Those are the ones I have in my own portfolio. I don't own Amazon. I'm still kind of kicking myself over not going for it, but I did mainly go into Tesla and Microsoft, and it doesn't look like I made a mistake because Microsoft did about as well as Amazon did, and Tesla even outperformed that for 2023, so not too bad overall. And the last call I made was Vici Properties, which was not a good call because we are down 6.84%. Now, Vici does pay a dividend. It is a real estate investment trust on Las Vegas Strip. Interest rates just kept going up in 2023, and it really impacted this business despite the fundamentals of the business improving, and they kept increasing the funds from operation per share. So the value of the company is higher, even though the market sentiment did not match the reality of how the company was doing. So unfortunately, didn't do too well. Although if we go back to the total return, because we received some dividend income of $24.96, actually break even despite the stock price going down 6%. But again, not a great performance. And if you want to see my portfolio updates coming up for 2024, as well as my 2024 stock picks of the year, please do leave a like and subscribe to the channel so you never miss one of my videos. Moving on, we'll go to the Canadian picks now. These did not go as well as my American picks, and we'll see why momentarily. So the first pick was actually quite good. It was Alimentation Couche-Tard, and I do actually own this in my personal portfolio. So it's trading at 62, currently at 76, so 22% rate of return. The TSX 60, I should say, returned about 7.5%. So this was a very good pick. Vastly outperformed the index and nearly matched the S&P 500, which is very impressive for a Canadian stock. And of course, some dividends on top of that, so even slightly better. The next pick was Brookfield. So this one was trading at a very low price of 48. It's now trading at about 53. I still think it's undervalued even this year, even at this price, but a 10% rate of return. So if we're comparing Canadian stocks versus the TSX 60, great pick because it outperformed it by about 2.5%. Pays a little bit of a dividend, so nothing bad there. If we go to Enbridge, this was a very bad pick because we paid 56. The current price is now 47.82. And while we're down 14% in the stock price, because the dividends are so high, because we received about $63 in dividends, the total return is only a loss of $19. So it kind of shows that if you have like a high yield stock, even if the price does go down, I mean, you can't discount the fact that you do receive dividends, and that can kind of help maintain the downside risk because you are getting a return even if the stock is not performing well due to high interest rates. But again, 2024 might be a good year for Enbridge. It could be a good rebound, especially if they start cutting interest rates, as that'll help a business that has a ton of debt just as a part of its business model, because the pipeline business is just a very capital intensive industry and they need to take on a lot of debt to maintain their operations, as well as make acquisitions, which they have recently done. So the market is a little bit weary of companies like that. But overall, not a great pick. And if I did have to go back and make changes to my picks, I would say that being diversified is actually what I would avoid. In these future stock picks, I'm actually going to go for the best opportunities. Like in the US picks, like we did well. We definitely outperformed the market here, but if I didn't diversify, like say I didn't do Berkshire Hathaway and I didn't do Vici and I just did Google and I did Apple or Netflix or something else in the tech sector, in that magnificent seven, the top 7 tech stocks, we would have massively outperformed even more. So that is something I'm going to look into for the next stock picks video, because I guess the fun of it is just trying to pick the best stocks of the year and do well relative to the market. We want to, ideally we don't want to underperform the market, but if we beat it, I mean, that's great. And I do want to challenge myself in studying some new companies that are outside of my portfolio, because it may give me more insight into what I currently own, and maybe I'll discover a new business I like even more than one of my current holdings. So it's a great way to grow my skills as an investor and researching these companies. So the next pick is TELUS. So again, similar story to Enbridge, these high yield dividend stocks of very, very high debt companies in the TSX really massively underperformed. So this was down 18% of the year. So I actually hold all 4 of these in my portfolio. So again, we can see not a great year for the TSX, especially because of the type of companies that we have, like utilities and pipelines, typically underperform in an era of high interest rates. But we can see that the total return, despite the price change being so drastic, was not as bad because these stocks pay very, very high dividends, and I am holding them long term. This isn't just a 1-year trade for me. So we'll see how these do in the future, but underwhelming, very underwhelming. And another thing that you might have noticed is that any stock that I have picked that has a low dividend yield actually did significantly better in terms of performance compared to a higher yielding stock. So that's something I'm going to pay attention to. Maybe I shouldn't be focused so much on a very high dividend yield. That kind of ruined our days over, for the Vici pick was bad, the Enbridge pick was bad, the TELUS pick was bad. And that's the one thing that they have in common, is that they pay a very high dividend yield, which typically indicates that it's a slower growing or more mature company. So you may not be able to expect the highest total return. And if that's what I'm trying to go for with these stock pick videos, then I should focus on that. Because like Couche-Tard, for instance, barely pays anything. Brookfield barely pays anything. And the stocks that don't pay dividends at all, like Tesla, and Amazon, did really, really well. Microsoft pays a very small one, but it's still a very interesting thing to notice out of this. And the final pick was TD Bank. So this one actually did do a positive total return, despite being down about 4.5%, because the dividend yield did kind of help cushion the blow. So it's kind of a neutral position, and it could have quite a good 2024 if we assume that we'd hold these holdings beyond the year. If I did hold all these holdings, so for the Canadian picks, interestingly enough, I do actually own every single one of these picks. I did think they were good picks going forward in the year, but it seems like I really need to work on my Canadian stock picks and really focus on not just the dividend yield that I receive from the company, but the growth prospects of those companies. But again, I did get kind of hammered by the interest rates. I didn't think they'd keep increasing, so it really proves you never really know what's going to go in that direction. But going forward, I'm going to try to pick the stocks that I think will have a very, very good year and the highest total return, and not rely so much on just a high dividend yield. And if we look at the overall results, we can see that my total return for my American picks was 42.77% versus the S&P 500, which did 23.85, which is a very solid performance for the S&P overall, but definitely crushed that. The TSX was significantly worse. We had a 2.5% total return versus the TSX, which returned 7.57. So Canadian market not doing so hot. If I average those two out together, just taking into account that I invested everything in Canadian dollars, and after converting the USD stocks to Canadian, since that massively outperformed, our total return was about 20%, 20.45. And taking into account the overall total returns of both the S&P 500 and the TSX, it was about 15.71. So I did beat the combined index of 50% S&P 500, 50% TSX 60, but we did underperform the S&P 500. So if we just picked that, we would have beaten our 2023 stock picks. So definitely going to be interested to try to beat this next year. So do stay tuned for my 2024 stock picks. That video is going to be coming really soon. And please leave a like and subscribe to the channel. And Merry Christmas and a Happy New Year.